What's going on, guys? So there is so much confusion with dropshipping and taxes that most beginners or even advanced dropshippers have no idea how any of this works. And that's why I'm bringing on one of the most knowledgeable people in this field who's been a tax expert for over 10 years. So I'm super excited to be sharing this information with you. Give him a little introduction of who you are.
Hey guys, I'm Chris Rivera. I'm founder of a firm called the E-Commerce Accountants. Name kind of says it all. We're an accounting firm that specializes in online sellers. I throw around e-commerce very loosely, but mainly we deal with entrepreneurs that are in e-commerce. So I've been an accountant for 10 years, like you said, and I've been niched down in e-commerce for about 4 years.
Awesome. So yeah, guys, so I asked you on my Instagram a few days ago on what questions you guys wanted to hear from him. So I have a bunch of really cool questions, but I also want to start off with him giving a little overview of what dropshipping taxes are, because I think people in general have a lot of confusion, whether you're a new entrepreneur or you don't know what's going down. Chris is going to give you the lowdown on this.
The way I like to break it down is into two separate categories. So if you're an online seller, the risk is really centered around income taxes and sales taxes. So income taxes are, name kind of says it all, it's a tax based on your income or your profits, right? And we can dive into that in more detail if you'd like. And then sales taxes is something that is confusing to a lot of entrepreneurs because it's actually not a tax that the entrepreneur technically pays, it's a tax that your customer pays. So if you're in the business of e-commerce, those are the two things in terms of taxes that you should really be focused on, income taxes and sales taxes.
Okay, cool. So I think one of the largest questions that I had, a lot of you guys asked this, is when do you actually need to pay taxes as an e-commerce business owner? Because most people are completely lost on this.
A lot of entrepreneurs, not just e-commerce entrepreneurs, but entrepreneurs in general, think that April 15th is when you pay your taxes, which is definitely not true. April 15th is when you file your tax return, which tells the IRS how much money you owe in taxes, basically. Realistically, how it's supposed to work is you are supposed to pay taxes quarterly or 4 times a year. And the whole idea there is, for those of you who have had a W-2 job before, when you get a paycheck, taxes are getting taken out of your paycheck and the IRS is getting paid sporadically, bi-weekly, monthly, however often you're getting paid. But for you as an entrepreneur, if you're making $10,000 on Shopify, let's say, taxes aren't getting withheld out of those payments. The IRS is not getting paid. So the way that they counteract that is they force you as an entrepreneur to pay taxes quarterly, which is, every 3 months you're supposed to stop, calculate your profits, estimated tax, pay it into the IRS. And that's the main reason why I always tell entrepreneurs, don't wait till tax season to hire a good accountant. Wait till you're actually making substantial amounts of income, then hire someone to make sure that you mitigate your risk from a tax standpoint.
Absolutely. Guys, you need to be listening to this because there is just so much confusion in this space. And I think Chris is really going to clear a lot up over here. So one thing that I think would be really beneficial to people watching this, because I know a lot of the viewers are primarily in the beginning stages, what piece of advice could you give to someone who's just getting into this field? They want to start making money, but they're just not sure how this works. Like, what advice would you give them to make sure they're doing this properly?
I'm a firm believer in when you're an entrepreneur, just focus on making money. And the rest, as you become more and more successful, the rest will work itself out. Let's break this down into legally and tax-wise. I'm not a lawyer by trade, but I know enough to kind of give some advice. I definitely recommend in the beginning getting an LLC because that at the very least gives you legal protection, but also it gives you the opportunity to structure to save money in taxes later on. So setting up an LLC, I believe, is super, super important. And that goes for both American entrepreneurs, but also non-American entrepreneurs as well. On the tax side of it, I think that in the beginning, just focus on making money. Taxes are very complex and professionals that specialize in giving tax advice are also very expensive. So in the beginning, just focus on making money. And then as soon as you have budget to pay a professional to help you mitigate or reduce risk for taxes, definitely do so. So to break that down, $20,000 or more per year in sales, that's when I recommend that you hire an accountant to at the very least do your tax return. And then once you're doing $30,000 or more per month in sales, that's when I recommend you hire someone to strategically help you tax plan.
So what could people do at home right now to prepare? Because obviously there's some actions that they could be doing themselves, right?
Yeah, so I am a firm believer in having good data. So doing your own bookkeeping, accounting, in the beginning, it's safe. I always tell entrepreneurs that as you're starting to scale up, don't undervalue the importance of bookkeeping, because bookkeeping gives you financial data, which is super important to making decisions for your business, but also it feeds directly into your tax return. I said before, your income taxes are based on your income or your profits, right? And if your profits are wrong, your tax number is going to be wrong, and that could be a very substantial number.
Absolutely.
So my recommendation is, in the beginning, definitely focus on getting your accounting and bookkeeping in order. And that doesn't always necessarily mean outsourcing that work, but again, as you start to generate more and more substantial amounts of income, it becomes more of a high risk area. So in the beginning, just focus on the data, the numbers, get bookkeeping, accounting in order. And again, once you hit that $20,000 sales threshold in a year, hire a tax professional to help you at the very least report things correctly.
Solid advice. Okay, cool. So what company structure do you recommend for e-commerce businesses, and at what stage? Because I know a lot of people are starting off with a sole proprietorship. Like, what do you recommend for beginners doing this, or even more advanced people, and when should they consider the next approach?
So legally, I pretty much across the board recommend having an LLC for an e-commerce seller. Now, I see it all with people coming in the funnel saying, hey, another accountant told me a corporation or a partnership or whatever. For e-commerce, LLC is the way to go, whether you're an American or a foreign entrepreneur, because the tax treatment of an LLC is super flexible. You can literally submit a piece of paperwork into the IRS saying, hey, I have an LLC, but I want my tax treatment to be an S Corp or a C Corp or whatever. So LLC is a really good idea in terms of your legal structure. Now, the other thing, and I'd love to find the person who started this whole rumor or this trend in the space, is I get people all the time saying, every single store I set up, I want to have a separate LLC, right? And while that does provide legal protection, the issue is that the space we're in, especially dropshippers, or I guess e-commerce entrepreneurs in general, it's transient in terms of the stores. You can have a store that does super well for 6 months, then it fizzles out. Then you have a legal entity that's out there that you have to resolve, you have to do a tax return, so it can get quite complex to track. So general guidance there is, even if you're the type of entrepreneur that has multiple stores, it's okay to have multiple stores or multiple sales channels, etc., in one business entity.
Cool.
Now, I recommend more complex structures once you have partnerships. So let's say you and I have a partnership. My recommendation is always you have your own LLC, I have my own LLC, and you structure things based on our different business structures. Maybe our business entities have a partnership in another entity, something like that. It can get quite complex, but I believe that every entrepreneur should at the very least have their own LLC.
Cool. Yeah, that was actually one of my questions is, these entrepreneurs, obviously, we like starting a lot of businesses. So entrepreneurs, the dropshippers out there have 5, even 6 stores, and people are wondering how they can structure this into maybe one company, or should they put this into a few different companies, or what do you recommend as far as, giving them guidance, because obviously they're going to keep making these stores.
The biggest pushback I get with people putting multiple stores in a business entity, which for the record, I believe is totally fine, but people say, well, what if I want to sell my business one day? How am I going to sell my business if I have 4 stores running under the same LLC? And the answer is quite simple. Every single time I've seen this a lot, people selling their stores, usually the person who's acquiring a store is purchasing the Shopify account, the Amazon account, the customer list, PayPal account. They're acquiring assets.
The assets, not
in
the
business.
LLC, most likely. Right?
Exactly. So as much as that LLC, no matter what the name is, how important it is to you, if there's a transaction that happens, most likely that LLC is not going to be acquired. So let's say I have an LLC with 2 stores in it and you want to buy one of the stores. What's going to happen is, in every situation I've seen this is the case, you're going to buy one of the stores, maybe the PayPal account, payment processors, etc., and I still own the LLC at the end.
Exactly. Okay, awesome. So I think by far the most confusing part about taxes in e-commerce is sales tax, which, hopefully you can agree on that. But what guidance or even just an overview on sales tax, just for everyone at home watching this, because I know there's been some new laws that have changed some different procedures, so maybe you could elaborate on this.
So sales taxes is definitely very complex. I'll start off with an example. So think of a time you were in a, let's say, a clothing store, right? You see a t-shirt you like for 20 bucks. So you grab the t-shirt, go to the checkout counter, and try to slip them a $20 bill. You can't buy the shirt. Why? Because of sales taxes. So the customer is not paying $20 for that shirt. They're paying $21.50, let's say, right? So sales taxes, as I said before, is really a tax on the consumer, the person buying the shirt. So let's say you pay $21.50 for the shirt. $20 is the store's revenue, $1.50 is sales taxes. That's not the store's money. The store is supposed to take that and pay it into the jurisdiction, or state, whatever state they're in. Now, historically for e-commerce sellers, sales taxes was only an issue where you're physically present. So we're here in sunny Florida. Every time I had a customer ship to Florida, you should be charging that customer sales taxes here in Florida. All the other states, no risk. Now the whole big thing is, it was actually a federal court case that changed all
this.
With
Amazon, is that correct?
It was with Wayfair.
Wayfair, that's what it was.
Wayfair was the court case. So, but it affected Amazon very deeply for obvious reasons. I'll explain, because there's probably a lot of Amazon sellers in the audience. I'll explain that too.
Yeah, definitely.
But basically how it works is, if you have a strong economic presence now, the state can come after you for sales taxes. Meaning, we're in Florida, let's say we both live in Florida, and you have substantial sales in California, right? Even though you don't have inventory, employees, you don't live there, you have no physical presence in California, if you have a substantial amount of sales, California can come after you for sales taxes.
Yeah, I've heard of this.
So what we tell clients is, especially the ones that just start out, is just focus on doing sales taxes in the state you're physically present now. Now, physical presence is where you live, where you have employees, or where you have inventory. Okay, so if you have any of those 3 things in a state, you have a physical presence, you have substantial sales tax risk. And any orders that are shipped to that state, you should be charging sales taxes. And it's a lot easier than it sounds. In Shopify, there's a button in the back end where you just turn on sales taxes for whatever state. So anytime a customer checks out, if they're shipping to New York and you don't have that button on, they don't pay sales taxes.
For sure.
If they ship to Florida, they get charged sales taxes. Then you, the store owner, have to take that money and pay it into the state that for which you collected it for.
Okay, cool. So Chris actually focuses in the United States and US clients, but we definitely have a lot of international viewers watching this. What can you tell us about VAT tax? Because a lot of people on Instagram were asking about this, and I think it would be awesome.
So VAT tax hit us twice this year. First it was Brexit, and then now it's the euro. So what happened was, VAT tax is essentially sales taxes for really any entrepreneur that ships to Europe, right? So the thing about VAT taxes is it's very difficult for them to catch you. Not to say don't be compliant, but risk-based approach in entrepreneurship is fair game. You gotta focus your time, energy, and where you're investing your money in places that are smart. And tax compliance in places you have low risk is that's something you have to consider. But here's what happened. So VAT taxes have been around forever, right? This is not something new. What changed was, as of 2 years ago, or whenever the whole Brexit thing happened with England, England was no longer part of the euro. So when England decided to no longer be part of the euro, they said we are also not going to partake in the euro VAT laws. We are going to come out with our own Brexit English VAT laws. So what they said was January 1st, 2021 is the go live date for anyone who's shipping products into our country. You essentially have to charge VAT taxes to your customers and pay VAT taxes. It's very similar concept to sales taxes. So why we got the question so much, it was terrible because it was during tax season. So why it was a whole big thing was Shopify put a notification on your store saying, hey, just so you know, VAT taxes for England are live for Brexit, right? So what we saw happen was they put out a bunch of legislation, a bunch of scary stuff to scare entrepreneurs into being compliant. But what we were noticing is that the companies, especially for dropshippers, that were shipping products from wherever your warehouse is, China and the US, wherever, into Europe, these shipping companies were actually registering for VAT taxes on your behalf. And what you may have noticed is that the prices increase for your shipping costs or for your product costs, whatever. So the shipping companies were doing that on your behalf. Then it all happened again because England had so many people start to become compliant with VAT laws that Europe decided to do the exact same thing with their laws and change their rules and scare a bunch of entrepreneurs into being compliant there as well. And we saw the same exact thing happen with shipping companies where they would register on behalf of the companies that were using them to ship. So a lot of people that come in the funnel say, hey, what's the situation with that? I've stopped sending orders to England or to Europe in general, whatever. And I say, keep it going. Just make sure you check with the company that's shipping your orders, with your supplier, whoever. And as long as they have a registration for that, you should be good to go to safely ship to Europe.
Awesome. Guys, I hope you realize how valuable this information is. He's absolutely killing it here. If you are enjoying this video, make sure to hit that like button and subscribe to the channel. We're gonna be getting into a few more questions with him. So question for you, what do you think is the easiest way for e-commerce sellers to save money on their taxes? Just low-hanging fruit for different entrepreneurs out there right now.
Yeah, definitely. So if you're an American entrepreneur, definitely what you can do is restructure your business as an S Corp. Now, that definitely takes some working with a professional. It's not something I recommend doing on your own, but the tax savings can be substantial and it's not a ton of work to do. Other things include making sure you're doing good bookkeeping. As simple as it sounds, you know, a lot of entrepreneurs actually overestimate how much money they're making, which is good when they tell their friends, but not good when they tell a guy like me that's going to calculate how much taxes they pay. So good, thorough bookkeeping is actually one of the best tax.
I completely agree because, you know, my second year into this, I mean, to be honest, my first 2 years I didn't do books that well, and now that I have it on point, it's completely changed the game. So I think that's great advice.
Well, the thing is, I mean, there are so many different softwares that you're using. You're paying maybe a couple different companies for VAs, or things add up, and you might forget certain expenses. You know, so good thorough bookkeeping is good. Also, deducting car and rent. I mean, as an entrepreneur, you're a work from home business, and you can deduct part of your car.
How much could someone potentially deduct? I mean, I know there's unique scenarios because I've rented out a house before, did shipping out of the garage, and I had my office there, so I kind of maximized the deductions there. But what would you say the average person with, maybe a room in their house could be deducting from their rent? Because they could probably save a ton of money with this.
Absolutely, and it's an expense you have to have anyway. So what we typically do with our clients is it's based on square footage, right? So if your house is, let's say, 1,500 square feet, you technically are supposed to measure out the space that's exclusively used for business, right? The IRS is very strict on that. So let's say of the 1,500 square foot house, 300 square feet are for business use. Maybe you warehouse inventory in your house, or maybe you have an office space, whatever the case is. Then that means 300 divided by 1,500 is about 20%. So 20% of your home space would be deductible in some way. And same thing with your car, except instead of square footage, it's based on mileage. So you kind of prorate it in that way. What I typically see is for your home, right? Exclusive use for business is hard to prove, so we're pretty conservative there. But what we see is anywhere from 15 to 30% of people's homes, whether it's rent, owned, whatever, you can write off for tax purposes. And then for the car, it's a bit higher, because if you have a work from home business, if you start tracking your mileage, you'd be shocked at how often you can argue that you're leaving home for business. So we see entrepreneurs write off anywhere from 40 to 100% of their car. If you have two separate cars, it's pretty easy to write off 100% of one of those cars. So awesome. Definitely low-hanging fruit there.
Cool. So there's a lot of international sellers who are watching this, and they want to know how taxes work and how they're going to have to pay taxes if they're selling in the United States. So maybe you could get into this and...
So this is a very complex area. We recommend consulting with a professional, but generally speaking, if you're a drop shipper and you're based outside of the US, my recommendation is number one, you have an LLC. And that terrifies a lot of foreign sellers because they're like, oh, does that mean I have to pay US income taxes now? Not necessarily. If you're a drop shipper, and this is gray, the IRS doesn't have exact guidance around drop shippers, but if you are a drop shipper that ships to the US and you have no physical presence in the US, it's called not having effectively connected income, that's the technical term for it, then even if you have an LLC, all the IRS wants you to do is an annual filing each year that tells the IRS how much money you've taken out of the country. And as long as you're compliant with that, you can have a US LLC with a US bank account with US payment processing and not have to pay any income taxes here in the US. However, you very likely will have to pay income taxes back in your home country. Now, what's cool about having an LLC is, and this is definitely super, super complex where I recommend consulting with a professional, but if you live in a high tax jurisdiction, you could take that same LLC and trigger it to be treated as a C Corp. And then what happens is, instead of you not paying taxes here and paying taxes in your home country, you can do the opposite and pay the US corporate tax rate, which is 21%, and not pay income taxes in your home country. But that's very technical and could take a lot of work to structure correctly.
Okay, so obviously you're gonna wanna speak to some type of tax professional about this, right?
For sure, yeah. Not something to toy around with, because you could be put in a position where you're paying double. You're paying taxes here in the US and taxes in your home country if it's not structured correctly. So just to throw a number on it, I recommend sellers that are doing $500,000 or more per month in sales. You know, that's when the tax risk becomes substantial for a foreign seller here in the US. So I would recommend then to consult with someone who has an expertise in that area.
Okay, awesome. So how common is it for e-commerce businesses to get audited, and how can you make sure that this doesn't happen to you? Because I know this process isn't fun.
We actually just went through our first audit and got super, super lucky. I'll explain that situation in a second. But most of the time when audits happen, it's because, in my experience, it's shortcuts with bookkeeping or people try to do their own tax returns. The IRS has automated systems to catch you, and I'll explain what are the automated systems that affect e-commerce, but also a part of it's random as well. So in terms of the automated systems, when people have payment processors, right, one of the things they ask for, whether you use Stripe, Shopify Payments, PayPal, is, hey, what's your social security number or EIN number? And people say, oh, my social security number is, instead of putting the EIN number.
Sure.
And what happens is, when you get that 1099-K form from your payment processor, right, which is, again, if you do $20,000 or more in sales in a year, that form also goes to the IRS. So what happens is the IRS has a record that Tan made $100,000 in sales. But when you do your tax return, let's say you have, Ecom LLC, Ecom LLC reports those sales and Tan doesn't report those sales, the IRS is saying, wait a minute, I don't have any sales, I have this record of sales from the payment processor, but Tan didn't report any sales. And that's the number one way I see e-commerce sellers get tripped up, is they forget to include the correct tax ID on their payment processors. And that's exactly what happened with the audit with the client we have now. And this one actually worked out in a perfect way where they're getting audited in a year that they weren't our client. And we onboarded them, and one of the first things that came up was, about a weekend, they're like, we're getting audited now for 2018. And this happened about like 4 months ago. It was actually very recent. So the IRS checked it. It was that exact situation that happened. Also, they weren't accounting for inventory correctly, which is a whole rabbit hole. I don't know if you want to get into it, but it looked bad. I thought this client was gonna have to pay like $200,000 in back taxes and penalties and interest and all kinds of stuff. But what wound up happening is exactly what I described in the beginning. They did their own bookkeeping and shortcutted it, and they were so incorrect on their income to the point where, and this is not concluded yet, but we recalculated the tax with the IRS, and they actually overpaid the tax in an unfavorable way. So even with the unfavorable changes that the IRS had for them to make, if we had our favorable changes and redid the tax return now, they were in a refund position. So the IRS is kind of in a situation that, and nothing to do with working with us, it was just luck of the draw.
Okay.
So
cool. So what do you think the biggest mistake that non-specialized accountants make who, obviously e-commerce isn't their main field? What mistakes are they making that, maybe you're providing that gives you that edge?
So I feel like a lot of e-commerce entrepreneurs have it backwards actually, where there's a tax person and a bookkeeping person, right? And people overvalue the tax person and don't value the bookkeeper enough, where I actually think it's backwards. Because if you have an accountant that understands taxes for businesses, it's not hard to do a tax return, even for an e-com business. But the bookkeeping for e-commerce businesses is quite complex because it's a high volume transaction business. You could have thousands of transactions a month. Easily. So accountants just by nature are trained to reconcile each and every transaction. And what happens is, if they're doing that work in QuickBooks manually, and that work is being done automatically through Shopify, Amazon, PayPal, etc. So that work is being duplicated. So more seasoned e-commerce accounting firms will look at you and say, okay, Shopify, PayPal, whatever your payment processors or sales channels are, all of the data lives there. As long as QuickBooks matches that data in terms of sales, we don't have to redo the accounting for that. We have to just make sure the data matches exactly and we're accurate, right? And then you do traditional accounting for all the rest of your transactions. What you're paying your VAs, what you're paying for Facebook ads, what you're paying for fulfillment, software, so on and so forth. So that's where we have a competitive advantage, where we come in and when we take over work from other accountants, we're like, we can barely log into your QuickBooks account because there's so many transactions that you're pushing through there. It's just not necessary. And most of the time it's not accurate because it's just such a high volume of work to reconcile thousands of transactions per month.
Okay, so when do you think it's the right time to bring an accountant on board?
I think I'm going to break this down to the tax professional and then more hands-on like CFO, accounting, sales tax type services. So if you're 0 to 20K in sales in a year, I think you're in a position where you can get a cheap accountant or do the tax return yourself on TurboTax, do your own bookkeeping, because your tax risk is very likely 0 or very low. Once you cross $20,000 in sales in a year, it's very, very likely that you're going to get a tax form from your payment processor. So that's when I recommend, at the very least, hiring a tax person to do your tax return. Now, once you're at a level where you're doing significant sales, and we define that as $30,000 or more per month consistently, that's when I recommend you get someone to come in and do sales taxes, do tax planning, handle your bookkeeping, do tax returns, do the whole thing, because you have a lot of tax risk, you have sales tax risk, bookkeeping is important to your business decisions. It's just, when you're making a lot of money, there's a lot of things that could go wrong.
Definitely.
So, having a good accountant that understands your business specifically can help mitigate that risk.
So Chris, you just brought so much value. I want to let the audience know, who do you work with, and for you to plug yourself so different people can go out and actually hire you for your services.
Right now, we work exclusively with American sellers. It kills me every day. I really want to work with the foreign entrepreneurs, and we're working on that. We're working on affiliate deals with foreign e-commerce accounting firms and stuff. That's all in the works. Right now, we work with American entrepreneurs, meaning if you're an American citizen or living in the US and you're consistently doing $30,000 or more per month in sales, then we have a lead form. We'll give you the link for it. You just fill out, give us your information, and we'll reach out to you to schedule a free consultation. So that's one side of the market. If you're an e-commerce seller, it's really crushing it. Now, for the foreign entrepreneurs or also the beginners as well, when we first came out with our firm, we weren't able to help those people at all. And that was a big pain point for me because I want to help out in the community and give value where I can.
Absolutely.
So what we did was we came out with a course, and before I scare anyone off, it's a $97 course. It's 4 hours of content.
And I'm not making any money from plugging anything here, so.
Yeah, it's $97. We'll give you a discount code, and to be honest with you, it's 4 hours of content, boring as heck, about accounting and taxes, but it's very structured to e-commerce businesses.
That's awesome.
Specifically. So it's everything you need to know, whether you're a foreign entrepreneur or an American entrepreneur. Has all kinds of stuff in there covering sales taxes, tax planning, tax returns, bookkeeping. Mm-hmm. There's also a quiz in there to test your accountant now to see if they're the type of accountant that'll be strategic to save you money in taxes.
Yeah.
That's how we work with the foreign entrepreneurs and the beginner entrepreneurs for now. And then for the more seasoned entrepreneurs that are making money, we do a free consultation. And if we're a great fit for each other, we can come in and work together.
And you'll send me these links so I can plug them in the video?
Yes.
Yeah, guys, so I'm gonna leave all the links to work with Chris. I think, if you're in e-commerce and you're crushing it right now, accounting and, being on top of your taxes is so important, if not vital. So definitely reach out to Chris. I think he brought some tremendous value today. Do you have anything you want to tell the audience or, leave it on a final note with everyone?
Nope, that's pretty much it. Just grateful to be on the channel, big fan of yours, and best of luck everyone.
Hey, thank you for coming on, man. It's great to have you.
Thanks.